The slide in U.S. stocks accelerated on Monday, with all three main indexes ending the session sharply lower, as the prospect of a ban on oil imports from Russia sent crude prices soaring and fueled concerns about rising inflation. The Dow ended down more than 2.3% in correction territory, having fallen 10% from a recent peak. The S&P 500 finished down nearly 3%, marking its lowest closing level since June of last year, and the tech-heavy Nasdaq closed down 3.6%, confirming it was officially in a bear market, now down 20% from its record-high close in November. It marks the Nasdaq's first bear market since 2020, but Ross Mayfield, an investment strategy analyst at Baird, said that longer-term tech stocks were still a good bet.
If Russia, Ukraine, or the Fed raising interest rates really does curtail U.S. economic growth, to a point where we're looking at an economic slowdown into potentially a recession, I want to be invested in companies that can bring their own growth to the table, like the high quality technology firms. So I think that's a place that is a bit out of favor, which is crazy to say after the last decade, but is a bit out of favor now that we would be looking to.
Tech giants Amazon, Microsoft, and Apple were among the top individual drags on the S&P 500, while the banking sector fell 3.7%. Shares of United Airlines fell 15% and Norwegian Cruise Line dropped 11.5%, among a broad downswing in travel and leisure stocks as the jump in oil prices threatened to disrupt a nascent recovery. Oil prices continued to surge higher, reaching their highest levels since 2008, as the United States and European allies considered banning Russian oil imports in response to the country's invasion of Ukraine.